As tech enthusiasts gear up for what promises to be an exhilarating earnings season, all eyes are fixated on Nvidia. With AI technologies taking center stage, Nvidia is expected to make significant waves, and the market is already reflecting this anticipation. In the past month alone, shares of Nvidia have surged more than 16%, a clear sign of investor confidence in its trajectory. This has put the chip-making behemoth on track to potentially surpass Apple in market capitalization, a monumental feat considering Apple's long-standing reign as the largest publicly traded company. Nvidia's meteoric rise can be traced back to a pivotal moment on October 3rd, when CEO Jensen Huang described the demand for the company's forthcoming Blackwell chip as insane during a CNBC interview. Such high expectations have translated into an 18% increase in Nvidia's stock price, reaching a peak of $130. However, the ascent was temporarily disrupted by reports of the Biden administration's plans to implement limits on the number of AI chips that can be exported to certain nations. This news caused Nvidia's rally to stall on Tuesday, but the stock made a partial recovery by Wednesday. As the earnings season unfolds, it will be crucial to monitor how external factors like regulatory actions and geopolitical considerations impact Nvidia's performance and investor sentiment. Nevertheless, the chip giant's robust technological advancements and growing demand position it as a focal point in the tech industry. And its performance will undoubtedly be a barometer for the sector's overall health and future prospects. Nvidia's incredible stock performance and meteoric rise in data center sales over the last year have put the company in a difficult position for its upcoming earnings announcement, which it has yet to officially schedule. In the company's fiscal Q3 2024, overall revenue soared 206% to $18.1 billion, while data center revenue rose a whopping 279% to $14.5 billion. And while Nvidia isn't staring down a decline in revenue, its growth will likely slow versus the same period last year, which could spook investors. Don't believe me? Just take a look at what happened after the company announced its Q2 earnings back in August. While the company beat on revenue and earnings per share, with data center revenue increasing 154% year over year to $26.3 billion, Nvidia shares still fell more than 6% immediately following the announcement. It took more than a month for the company's stock price to recover. The AI trade hasn't raised all ships, either. Shares of Broadcom jumped 59% year-to-date, outpacing the broader S&P 500, which rose 21%. Qualcomm climbed 19%, and AMD added just 6% to its stock price. Meanwhile, Intel fell a stunning 55%. Broadcom benefits from its involvement in AI infrastructure, connecting servers and the like, while Qualcomm is seen as a potential beneficiary of on-device AI growth via AI smartphones and AI PCs. AMD is facing off against Nvidia and serves as an alternative on both price and availability. Then there's Intel, which is struggling amid its enormous turnaround effort that includes building out its third-party chip fabrication capabilities, as well as trying to catch Nvidia and AMD in the AI processor space. But Nvidia is still the hands-down star of the show this earnings season. Investors will be looking for signs of continued AI spending from hyperscalers like Microsoft, Google, Meta, and Amazon, which make up a huge portion of AI sales, to get a sense of how well Nvidia chips are selling.